One is known as the Oracle of Omaha and other as Superman. Warren Buffett and Li Ka-shing are two of the most respected investors in the West and the East. Now that both in their 90s and just 2 years apart in age are holding cash. Is it a sign of looming financial downturn? Buffett's Berkshire Hathaway has amassed a record 334 billion US dollars in cash, accounting for 29% of its total assets. Meanwhile, Li Ka-shing's company has been steadily deleveraging, holding cash from its sale of European tower assets and possibly becoming debt-free after selling most of its ports to a BlackRock-led consortium for some 19 billion US dollars. Neither investor is rushing to reinvest, and that raises serious question about where the world economy is headed. Both Buffett and Li have a long history of knowing when to cash out. During the 2008 financial crisis, Buffett's investment in Bank of America yielded over $30 billion in profit. Li knows for its impeccable market timing, sold a controlling stake in UK mobile operator Orange in 1999 for $15 billion right before the dot-com crash. In 2017, he sold a Hong Kong skyscraper for a record 5.2 billion US dollars just a year before the market peaked. The fact that these legendary investors are now sitting on unprecedented cash reserves suggests that they might see storm clouds ahead. If history is any guide, they don't hoard cash unless they believe that better opportunities will emerge after a major correction. Buffett's strategy is very simple and straightforward. He has repeatedly warned that US stock market is overvalued, particularly based on his famous indicator, the Buffett indicator, which compares the total stock market value to the GDP gross domestic product. With the ratio at record heights, Buffett's reluctance to buy suggests he believes the market is overheated. Li's actions are more intriguing. His decision to sell his company's port operation outside China, despite Beijing's reported displeasure, suggests he might see a structural downturn in global trade. Could this be linked to the geopolitical tension of Donald Trump imposing Trump tariffs, as I like to call them? So should you and we, the investors, be worried? Well, hoarding cash doesn't necessarily mean a market crash. However, it definitely indicates that these seasoned investors see better opportunities in waiting. It's easy to get caught up in the market current rally, but if two of the world's greatest investors are stepping back, it might be wise to ask why. As Buffett famously said, be fearful when others are greedy and be greedy when others are fearful. Right now, he and Li Ka-shing seems to be the fearful camp. That should give the rest of us something to think about.